Join us for Diffusion Digital at diffusion.events, our two-day virtual conference from the 15th to the 16th of September, showcasing leading projects from across Web3 with firesides and panels featuring leaders like Joe Lubin of Ethereum and others from projects including Set Protocol, The Graph, Dapper Labs, Parity, R3 Golem and eToro. Today, I'm really happy to welcome Stani Kulechov, a co-founder of Aave. Welcome to the show.
Thanks for having me, and pretty excited to be here.
You've been in the news a lot recently, so there's a lot to talk about. So as a quick description, you would describe Aave as the money market protocol and a leading DeFi project, a decentralized finance project. The website describes it as an open source, non-custodial protocol enabling the creation of money markets where users can earn interest on deposits and borrow assets. And effectively, you're offering both stable and variable interest rates for lending, as well as innovating in the kind of uncollateralized loan space, or AKA flash loans, which is aimed at a slightly more kind of sophisticated user base, and primarily developers. So we'll unpack that a little bit later. So the reasons why I wanted to get you on the show, there are lots. But firstly, at the time of talking, you now have around about $1.5 billion worth of different crypto assets staked for credit lines, which is a huge achievement. You've just overtaken MakerDAO for the title of the most collateral staked on Ethereum. So congratulations for that. I don't know how much weight you put into these. Do you take time to enjoy these milestones, or do you pay much attention to them?
Well, the cool thing is that we kind of share the success quite a lot with everyone that's building on top of Aave. So, I mean, we have a developer-friendly protocol, which means that most of the locked value comes from people that are building on top of Aave and creating interesting DeFi primitives. And I think it's kind of like, for us, this is a very big milestone in terms of like how we see how people trust our protocol the most. But our goal is basically to ensure that we're kind of like a base layer and helping others to build. So we kind of share the success with everyone that has been building on Aave, or in general. This is a good thing for DeFi.
Yeah, and I think this is a really interesting thing for listeners to understand is the interplay between yourselves and the rest of the DeFi ecosystem, and how you kind of accelerate one another's success. At the same time, this is not an overnight success. So you've at least 3 years old, as far as I could figure out, and one of the first movers, if not the first mover, long before the DeFi hype, which of course we all welcome, but at the same time, it brings new complexity, mo money, mo problems, I guess, as they say. And, you came to market before projects like Compound. And so it's interesting from a founder perspective to understand that interplay with competition and how you see it. As you said, you kind of deliberately taken a more community-driven approach than other competition. You did a token sale back in 2017, previously as ETHLend. And the offerings evolved a lot since then, including the token. So it's going to be interesting to understand that journey. Again, from a founder perspective. As I said, with things like flash loans, you're very developer-centric. And so I think it's going to be interesting to understand how you see crossing over from developers potentially into mainstream retail, if that's something you intend to do, or you always look to kind of focus primarily on the developer. But equally, I think it could be said that you're one of the first and few great products in not just DeFi, but Web3. There's a huge amount of attention has clearly gone into the UX. And you've also recently secured an electronic money license here in the UK, which is interesting in and of itself. But I also think, similar to MakerDAO, whose founder is Danish, you're from Helsinki. And so I really want to understand why all of this stuff is happening in this part of the world. What is it about this region? It's non-obvious, to me at least anyway, that two of the leading projects in crypto would be coming from here. So it's going to be interesting to understand, well, if you think that's just random, or there's a pattern and a signal there to understand. And equally, similar to Rune of Maker, no offense intended, but it's non-obvious that it would necessarily be you that would be the founder of something like this, both from a professional and an academic background. So again, I think it's really interesting to understand, why you and why somebody from the part of the world that you're from. So maybe to just give some context to that from a origins perspective, I always try to kind of summarize as best I can the background of a founder to give that context, and perhaps you can help me build upon it. But as far as I can understand, you did various traineeships at a number of law firms, from what I could see, Bird and Bird, Carson and Snellman, and some others that I can't pronounce, from between 2016 to 2017. And equally, you've been a member of the Legal Aid Committee for the Law Students Association in Finland, as I understand it. And that's still something you do now, right?
Actually, I haven't. No, I haven't done it for since I got vacuumed into the DeFi world. But yeah, I mean, in background-wise, it's kind of interesting because, like my background is law. Like I went to study law. Was super interested in kind of like. I mean, for me, like law is a bit like opinionated, and I wanted to kind of figure out like how this kind of like opinionated consensus is driven. And before that, I was basically developing different kinds of apps and doing projects and usually financial applications. One of the applications that I was building, and it wasn't a startup, and I was very young, more younger than now, and it was basically about letting, let's say, app developers or anyone who is publishing at Google Play or App Store to advance their earnings for the next day. So typically when you are a, let's say, game developer and you are getting revenues from App Store, you have to wait 1 month and 15 days or so, and then you get your monthly payouts. And our idea was basically to advance those payouts. And finance has been always a bit of something that has been in my blood. So I always liked like financial instruments. And when I was very young, I mean like 10 years old, 13 years old, I used to watch a lot of like the stock markets and trying to understand like what's going on and tried all kinds of like paper trading. And when I was in the junior high, we had a paper trading kind of like a contest, and I won that as well. So I was always somehow eager about finance. And then in law school, I started to research Ethereum. I got somehow bumped into it when I was just researching other stuff related to enforceability of agreements, and somehow end up reading about smart contracts. And I was thinking like, wow, this is fascinating. Like you basically have a piece of code and it's in the blockchain, and after that pretty much immutable. And I was thinking like kind of like the use cases of the idea that you could actually build pretty interesting things. And then I started to get more involved. I was very active in the Ethereum community and started to basically try out the different kinds of like use cases that I wanted to build around finance. And something I saw kind of like interesting is that before I started to build, there wasn't DeFi. There was like how Ethereum narrative went. It's basically that there was the DAO, and then there was the DAO hack, and then there was this kind of like a quiet period. And like one of the first DeFi applications on Ethereum was Ether Delta, and that's basically a decentralized first decentralized exchange, I could say, on Ethereum. And also it didn't have any much traction until the token sale boom became popular. And I wanted to kind of like think like, how could we actually make loans on Ethereum and in a way that the borrower is incentivized to repay back. And we came up with the idea that you actually put a collateral and then you borrow against it. So that was like the project name was ETHLend, short for Ethereum lending. And that was the kind of like the beginning of the collateralized loans, and the whole space evolved later a bit more. And this was 2000. We started 2016 to build, and 2017 we launched, and then the ETHLend community grew quite substantially, and basically that got us like further. And it has been like many years now. I mean, we rebranded last year into Aave, and this year, January, we launched the Aave protocol. And I think like all those 3 years that we did, I think they all kind of like are a result what we are today and where we are going for multiple reasons, not just kind of like the fact that we get more knowledge on building smart contracts, but also the point that we kind of have the narrative as well, that we kind of understand like where the DeFi space is going and what has been previously happened. And that's very important to kind of like acknowledge. And then the kind of point of why there's so many Scandinavian startups, or like, let's say like Aave and Maker, we're from Nordics, but sadly, I think if we look at DeFi community, sadly, there isn't that many people in the Nordics. I think in the DeFi Finland, we have 27 members only, and probably active too. So it's kind of, in some sense, it's there isn't like that much activity there, but interesting things are happening. But that's the cool part about DeFi, because it democratizes. If I would create something like ETHLend back in the days, and for me, it would be quite impossible to reach out for capital, for example, from Silicon Valley, from London. I mean, basically, you have a person who is in college at the moment, building on technology that is basically very novel, building on industry that doesn't exist, and kind of like there is so much risk involved, and like, so basically the token generation was a democratic way actually to raise funds, and that was interesting point. Kind of like now it's a bit different. I mean, now kind of like DeFi has went quite large and decentralizing geographically, and it might be easier. And I love the fact kind of that like the permissionless factor in DeFi is not only about users using permissionlessly, but builders building permissionlessly and using the whole ecosystem for their advantage.
Yeah, I mean, I think it's really interesting that, I mean, obviously, most of the successful projects in DeFi have evolved out of the Ethereum community. As a consequence, they've kind of got that in their DNA, a lot of the philosophy behind how you build community. And clearly you've managed to bring this initial base of the Ethereum community with you on that journey. And certainly, you know, there's when people have made comparisons between you guys and say Compound, it's often Compound is called the VC equivalent because it's got all the Silicon Valley VCs compared to you guys, which are seen as very community centric. And I do think it's interesting. It's almost that given where you are, and I'd argue even were you in London, you still wouldn't have been able to attract the level of venture capital that you would have got were you in Silicon Valley. But actually that has been your blessing in a way, because it has forced you, whether you would have naturally done it or not, to build community, to work with the community, to raise capital from the community. And clearly that has led you to compete from a very strong vantage point. And that is something I want to get into a little bit later, as well as how, as a project, you've evolved, and then also the Lend token itself. So, you know, previously it was just to kind of give better rates, but you've kind of added features, and I think that's a really interesting concept. You know, is there something as a minimal viable token, and then you add features into it, such as a platform governance, and I know the community can now vote on proposals made by the development team, interest rates, new assets. And of course, that is also something that is true in MakerDAO, that idea of devolving increasingly to the network or dissolving the organization. So if we kind of jump into that evolution story, I think it might be worth just at the top end giving a high-level summary of the product offering that you've got and the unique selling points versus the competition that's out there.
Yeah, continuing what we did from Eatland, so we started to see the space evolving kind of like in the state that we're trying to lock a lot of capital into smart contracts, and that has been a meme yardstick of the total locked value in a way to measure basically how much your smart contracts are trusted. It's an interesting metric in that sense, like the trust factor, but it's difficult to measure the same platforms, let's say, whether it's lending, trading, with the same kind of yardstick. And like what we saw what we tried to do with Aave protocol is basically to, like, ironically unlock the capital. So we are now we have most of the locked value in the DeFi space, but our actual goal has always been to unlock the value. And it's kind of like interesting, because the interesting part about Aave protocol, so as a money market protocol, it basically means for any user that they can deposit cryptographic assets and earn interest on them. And when they're depositing those assets into Aave, they're getting in return A tokens, which is basically interest-bearing token. And the implementation is pretty cool because those tokens, they increase in balance right where you are storing them. So if you're storing in MetaMask or somewhere else, over time, you will see that balance grow all the time. And the idea here was kind of like we tried to mimic the user experience that you would have, let's say, in a payments account or in a bank account, where if you get paid interest, you see the balance grow. And that has been like very cool feature. And then those tokens are actually value. So when you deposit DAI, you get a DAI. That a DAI actually is worth of your deposit and whatever you earn there. So you could use them in somewhere else as a collateral, for example. And the cool part about this system is that it unlocks a lot of that value that we were talking about. And then we noticed that when you deposit to Aave, you can basically unlock yourself a credit line. So you can borrow against your ETH, you can borrow against your stable coins. And fascinating here is that roughly when you look at the lending pools and lending protocols, roughly 25%, 1/4 is exercised in terms of credit lines. And we noticed that the rest of the funds are just sleeping in the smart contracts. And you can't have a 100% utilization ratio on all the assets because some of them are used as a collateral. But interestingly, we tried to figure out like how we could somehow put those funds into work. And then we introduced a feature from the very beginning called flash loans. And the idea of the flash loans is that you can borrow even all the liquidity that there is in the smart contract. So now there is 1.5 billion worth of value locked in the system. That basically means that you can borrow for one transaction all that value without any kind of collateral. And the functionality here is like people ask like, okay, so why would you borrow for one transaction? What you can do with this one transaction? Well, the interesting part is that how the blockchain settles is that you have always a block that has maximum gas available for consumption. And that block will be filled with transactions. So each Ethereum block basically have multiple transactions, and each transaction can have nested transaction. So you can create a transaction with nested transactions of flash borrow from Aave, buy an asset in Uniswap, sell an asset in Kyber, and take the profit and return the flash borrowed amount. So you could do arbitrage, but you could also do many interesting products for end users as a developer. So typical thing is, for example, refinancing. So let's say there is a loan position open, let's say in Compound, and let's say you're paying some percentage of borrowing USDC against your ETH. So and you already spent that USDC. So with a flash loan, you could take a flash loan from Aave, and basically in USDC, you can return that USDC, take that Ether, put it into Maker, and print DAI, convert that DAI in Kyber back to USDC, return the loan to Aave, and basically what you did, you created a product for your end users where they can refinance from one protocol to another, and from one currency to another, and from one interest rate to another. And this is like substantial benefit for the end users. And the latest kind of thing that we added in terms of like unlocking value narrative is that when you deposit to Aave and you have the credit line that you can exercise, if you are not exercising that credit line, you can delegate it to someone else that you trust or to a smart contract, and to earn more interest. And this is very cool use case for the future, because it allows you to take liquidity into, let's say, OTC lending desks, or to traditional finance, or just keep it between smart contracts, and basically ensure that the smart contracts that you're delegating, they basically don't have any kind of like functionality that those funds are at stake somehow.
So how do you see the function or the role of Aave and in the context of DeFi generally? Because when I try to explain DeFi and what's happening in crypto to somebody that's not from the space, often they get kind of very, very confused. But I try to simplify it as, look, this is kind of a permissionless sandbox for financial technology. And in a way, you could think of it as a place where these innovations are tested out in a relatively contained environment, because of the technical barrier to play is so high that even though in theory anybody could play with this technology, it's unlikely that they would. And so this is a place where innovation can be carried out at a global level, but I think where successful, you'll begin to see it either begin to eat away at the existing financial markets, capital markets, or begin to be co-opted by, say, fintech startups who can start to roll out new products and features. So when you think of your users, like who are your users, and the users that you have today, are they going to be the same users as tomorrow? Are you always just focused on helping developers realize financial products, or would you ever kind of extend into offering products and services directly to consumers? And I guess in that context, perhaps you could explain why you felt the need for this electronic money institutional license from the FCA in the UK.
Yeah, definitely. So I think we always had a like definitely we see Aave as a protocol. The Aave protocol as basically has a horizontal approach in the sense that it's a permissionless protocol. It's decentralized and governed by the Aave DAO that we are basically transforming into, and essentially by the token holders. What's interesting is that the protocol will always be decentralized, but then you can build different kinds of businesses around it and access points. So at Aave, we always have been having this kind of like a vertical approach idea. So when we created Eatland, back then, most of the approaches in the space was creating something on horizontally. So people were building protocols on top of protocols and on top of protocols. It started to be kind of like a bit too hilarious for us, because no one was able to take the actual link all the way to the end consumer. And if you kind of like go back in a few years, and we will see like a lot of kind of like projects, and no one is taking actual. People were talking about adoption, who is the end user. We see things being built, but always horizontally. And with Eatland, we actually went all the way to the end user. and we wanted to give them like the best experience, even though the space was very limited. We didn't have stable coins. The use cases were limited, but it was very good experimentation. And with the Aave protocol launch, we actually put a lot of effort on the user experience of our user interface, because currently I think there is like 50 different access points where you can access the protocol itself, including the Aave dashboard. Ours was, of course, the first one, and we wanted to make the experience as good as possible so that it leaves an impression for the community and end users. So we definitely believe that to actually kind of like have good brand exposure and adoption, we also need to have this kind of like an end user reach. And we love to see more basically dashboards created on top of Aave, and better user experience and tailored user experience or localized user experience. That we love to see. We also want to basically adopt more users into the space, and basically we obtained the electronic money license for our UK integrations entity, which is helping with the Aave integrations globally. And the idea there is that if we allow a gateway where users can convert their local currencies into stable coins, and then kind of like leave that entity and go into the decentralized technologies such as the Aave protocol, that will help the adoption. So I think currently we see it as a big bottleneck that you have to go many loops before you can actually do a deposit. And I think that is like what we are now focusing as well, that we want to expand the reach. We want everyday people to basically be able to kind of like try DeFi and get closer to DeFi. And that's what we are now trying to achieve with adoption.
Yeah, and I think it's going to be interesting to talk about how you see your ability to, as an ecosystem, but then also as an organization, to compete with high street lending if you're going to go all the way to kind of mainstream retail adoption. But before we go there, I'd like to understand from a founder perspective the challenges of being a first mover, because you were the first mover in the space. Of course, now there's lots of competition coming. I mentioned Compound a little bit earlier. Can you talk through the benefits and the challenges of being a first mover and how you engage with new competition coming into the market?
Yeah, definitely. Like being a first mover is kind of like a unique position in the sense that you're coming to the market that you need to create, and kind of like you kind of need to benchmark whether there's market fit and product market fit. And interestingly, with Eatland, for example, we were quite early in the sense that there was so many, like we had a good amount of users, we had good amount of value locked compared to the times that we were. But I think the kind of challenging part is that when the ecosystem isn't mature enough, there's less users in the whole ecosystem. So one of the things I noticed during the Eatland era is that back then there was basically Eatland, there was one decentralized exchange, and over the time the ecosystem started to build. We saw Kyber coming, then we saw Uniswap, and then we saw arbitrage opportunities. So there was some action there. Then we basically saw stable coins coming, and that kind of like created an ecosystem where you could already create many different kinds of things and usability. And I think the space always has been about incentives. And I think once people started to understand that they can earn on their stable coins, that changed a lot. That basically sparked the adoption quite well a bit. And now with the different kinds of incentive models for liquidity providers, it's also basically bringing adoption a bit. So it's kind of like step-by-step process, but all roads lead to the incentives. That is what I've seen previously happen. And the ecosystem also needs to exist. So as a first mover, you always have this kind of like a issue that you might be too early. And the too early means also kind of like if you're alone in the space, It's of course difficult to get users. It's difficult to get funding as well, because I mean, VCs they like to invest based on a bit of FOMO, and it's interesting, because we're talking all the time with different VCs, and they're always saying like, I wish we were around, like we saw you guys in 2017, but I don't know why we didn't like notice anything, and you kind of see always like when the ecosystem is there, then like when things are happening, it becomes more interesting because it becomes like a more like a game, and that excites quite a lot, and you can do different kinds of things, then you see more the potential. But I guess it's all about like the network effects. So when there's things around, you could do things, but as a first mover, you always have this kind of issue. But in terms of competition, I usually see competition as more of a supportive element, in terms of like everything that is built brings some sort of like a user base into the ecosystem. And that's good, because that means that there's more users that Aave as a protocol can basically serve. So if someone builds a product on top of Aave, or basically a competitive product, that's totally fine, because they will attract users as well, and they also keep us innovating as well. So I think the developers around our protocol are basically happy to innovate all the time. And if we see others also building innovation, it's easier for us to kind of like continue what they build, and then let others basically continue what we build. And this constant kind of like a innovation cycle, it's really good for everyone. And of course, like I've seen many are saying that like the space will be about like winner takes all, and we had this mentality last year, for example, and even beginning this year, that let's say that there's Maker, they're going to be big on this, there's Compound, they're going to be big on that, and Uniswap going to be big on that. And this narrative died like a few months ago, like completely. And this was the narrative that many VCs were doing their investment decisions and writing their blog posts and saying that this is going to happen, and this is like the thesis and the playbook. And it didn't happen. And actually, like now we see a lot of cool things. There's Balancer, there's a lot of new things coming up. And that's the thing. I mean, the innovation is the driver. I would say like that takes us like further. And I really love to see new things. And if someone is working on something that in DeFi, I think I am Aave are like happy to help.
Yeah, I mean, I think that's a really interesting thing about this space and DeFi in particular, that most people, it's a very difficult thing to get your head around, because it's very unusual that almost with every new project that comes to the space, it matures the stack, it allows for more features, more product, or it brings new liquidity in. And in a way, either directly or indirectly, everybody's kind of cooperation, because they're all kind of bringing some value that everybody can gain from. And it helps accelerate the space. And of course, brings, as you say, attention. So I think, it's good to, you mentioned earlier that you have this vertical approach, and with this new license that you've got, how do you see this interplay between DeFi and fintech, like a classic fintech startup? Is your aspiration almost to move towards being considered a fintech startup rather than this niche DeFi project? And how do you think it's possible to compete with high street lending and acquire mainstream users?
I see like DeFi growing as a space, more becoming less of a niche. But also, I think kind of like what's interesting, what fintech is doing is they're basically playing with the with the fiat money, in terms of like giving different kinds of efficiencies compared to high street banking. And then we see DeFi, where the play is about cryptographic assets and so on. And I think like at some point, I could even say I have this vision that like DeFi could actually eat a bit like the fintech and the high street banking. But the way of the development goes, it's slow. banks are still running like very old systems from the 70s. For fintechs, it's quite easy to operate and adopt new technology because they're built on new technology. But I see like somehow that the DeFi space will grow, but and those decentralized protocols will always exist autonomously. But I think what fintech is doing, they probably will notice the value added and somehow utilize it. I could imagine, for example, a fintech company allowing deposits into the Aave protocol and providing yields for their users. I would also imagine that Aave depositors could delegate their credit lines to companies like Funding Circle, who are then basically sourcing affordable liquidity from DeFi, and then basically further lending to their consumers and businesses. So I think that there will be this kind of like interoperability. And the cool part is that you don't need actually to build completed DeFi because you just want this kind of access to this kind of liquidity. So I would think like DeFi will become like a liquidity ocean that everyone would like to plug in and get some liquidity or do different kinds of things. But actual like the user interfaces and functionality, they don't need to be DeFi. And as long as there is this like fiat system, of course, like that needs to be served. I think kind of like DeFi and fintech are more and more kind of like taking over what high street offers, because the high street experience is the worst user experience on the planet, and it's getting only worse, and that's very difficult. And high streets basically plan is to hedge this by having in their portfolios fintech companies that are doing the innovation, and in one way I see it kind of like a somewhat positive thing, because last thing we want is kind of get stuck into the high street banking. But I think over time, like fintech will definitely grow, and also the DeFi. And I would say just the biggest kind of like a deficit is the high street. But in terms of like investment banking, they're pretty flexible to find opportunities. So I guess that will be the first looking at something like decentralized finance.
So where do you think the biggest opportunity is? Do you think it is this integration or co-opting by incumbents, or even fintech? I mean, you could look at fintech to a degree as an incumbent in the context of DeFi in the West, or do you think there's a bigger opportunity going over the top into emerging markets where there are no banks, there are no high street banks, and this concept of unbanked, that these people don't want a bank, they'll probably never have a bank. Where do you see the most opportunity?
I know that there's going to be adoption in the Western countries, but what fascinates me actually is the adoption in emerging countries, and we're trying to make it very easy. A tokens, in essence, let's say if you have ADAI, AUSDC, it's basically a permissionless global USD nominated savings account. And interesting part is that if you're in a country where there is high inflation, or you don't have access to decent saving rates or USD nominated savings rates, this is a wonderful tool for you. And you don't need to actually deposit to Aave to get AUSDC or ADAI. You could actually go to a market and buy it from there. So the user experience is quite seamless. So when you buy ADAI, you start to at the same time to earn the interest, and that is what makes it really cool. And like the onboarding is so easy, and the missing part is just to connect to this world and find yourself to buy these tokens. But I'm very bullish on emerging countries, because once something is adopted, it can scale quite a lot. And I think in Europe we've always been very in fiat countries in the sense that we somehow like banking and that's very interesting for us. But that's not the same case in, for example, in Southeast Asia or China, for example. And we've seen a lot of growth on the usage of the Aave protocol in Asia, and I think it will just continue. It's very fascinating to see. But I think we try to be very global in terms of like how we try people to perceive our brand and so forth. I think we have done a very good job in that sense, that we try to be present a bit everywhere to see like where might be the place that DeFi grows more. But yeah, I think it's a global phenomenon, but there's sort of potential in emerging countries.
So what are the constraints to DeFi? I mean, one of the obvious ones is, gas fees at the moment, and but as an organization, as a business, however you kind of think of yourself, how do you manage the risks and constraints placed upon you by what else is going on that you can't control?
Yeah, I think the biggest constraint maybe definitely or now kind of like the challenge is that people need to build securely DeFi. That basically means that like there's like DeFi is all about permissionless and trustless interaction. You don't need to trust anyone because you can verify code. But if you want to actually adoption, you can't rely on people on reading code. It's the same thing that you can't rely people on reading terms and conditions when they're using Twitter, for example, and because no one reads terms and conditions. And now we have basically smart contract based ones kind of. And I think like what's important is that the space needs to be securely, and it means that basically that there's sufficient audits done and best practices are used when building smart contracts. And this is very important because if there is some sort of like a hack or a deficit event, what happens is that the whole space gets kind of like a hit, and it's very difficult to come out of that. And one part, the Aave tokenomics is part of that. Like our tokenomics are focused on safety. So basically the token holders are making governance decisions, risk-based governance decisions, the lending parameters, which assets should be added into the pool. And in return, they're taking the risk transfer of the protocol from the depositors because they're staking into a staking facility, and that stake is used to compensate any deficit there is happening in the protocol. And that is kind of like the way to get a bit more towards the mainstream and the institutionals, because you always need to have some sort of like a insurance instrument. And more about the fact that when we are building in DeFi smart contracts, it's a human work, and human might make errors even after audits and formal verifications. You never know. So there's always need to be a lot of focus on security. And I think once we have secure enough space, we get adoption, of course. Then fintech is interested. Then high street is interesting because basically good things happen, inefficiencies are reduced, and I mean it's a win-win for everyone.
So how far away do you think we are from DeFi being professional enough to be accepted by regulators and, as you say, large institutions?
I think roughly like maybe 1 year.
Okay, so not that far away.
Yeah.
And when you talk about that risk, obviously there's reputational risk. There might be risk to a particular amount of collateral. How much do you think these kind of unaudited innovations coming through in DeFi bring systemic risk, so the ability to potentially cause a market-wide crash?
Good question, because I mean every single line of code brings new risk, and as we like, the interesting part about DeFi is the composability. So basically, you can build things on top of other things and build new financial products. But also it means that you're relying on different products, and it's different than in the banking space where softwares are closed source and the system are closed and the settlements have some sort of like a timelines. But here, every transaction is settled after you basically initiate it. So I think the composability, which is kind of like brings the value added. On the other side, it always puts more systemic risk into the space, and it's kind of like double-edged sword. So in one hand, you're getting this benefit. In other hand, you if you screw up the whole system.
Yeah, no, I mean it's fascinating, to be honest with you. Stani, look, I want to respect your time. We've had you on for a good chunk of it. I know you've got lots of things to do. You've just got back from your vacation like me, which wasn't really a vacation. You're a busy man. But I think it's great that, generally what you're doing for the space, but also specific to the work that you're doing with regulators in the UK, as a Brit. I think that's going to be really important for us to maintain a global leadership in financial services, but also fintech. So thanks for coming on the show.
Yeah, and thanks for having me. I think DeFi is going to the right direction, and I can't wait also personally come back to London and meet personally as well.
Yeah, we have to get a pint in sometimes. Thanks very much, Stani. Thanks for coming on.
Cheers.
If you're an early stage Web3 founder, apply to our award-winning accelerator program, Basecamp, at outlierventures.io/Basecamp. We write your first $50,000 check and give you access to 200 mentors, including many of the leading Web3 founders, and a network of 1,000 of the world's leading investors and exchanges. We've helped over 30 startups from 15 countries from all around the world raise $130 million in growth funding and can help you fast-track product market fit and, where relevant, the launch of your token economy.